G'day, Jeremy Harper here, and today we're going to talk about interest-only loans. Big update around one of our major lenders are now offering a 10-year interest-only facility. So on application, they will happy to approve a 10-year variable interest-only loan that is applicable for investors. So I wanted to unpack that a little bit, go through a couple of examples, understand why that could be suitable for, particularly for the investors, and what phase that is when they're trying to build out their portfolio. In my opinion, this is probably more suitable for someone that is looking for a growth phase. So they're looking to sort of sit on their existing properties and allow that growth to occur through the property and over time. So maybe the horizon is I've acquired 1 or 2 sites and I want to sit on that for the next sort of 5 to 10 years and allow that growth in the property to take care of that equity piece. Typically if an investor is looking at that sort of accelerated purchase phase where they're trying to acquire assets, you may look at principal interest as an option. And we'll unpack that later, just because when it comes to a borrowing capacity, when people are trying to acquire property, they're quite often reaching or stretching out that borrowing capacity. That principal and interest repayment is actually going to increase their borrowing capacity versus interest only. Yes, it has a negative impact on cash flow because obviously we're paying back the principal component on top of the interest, but that is something to just be mindful of, that a lot of people will default to interest only from the first purchase, which can hold them back in terms of borrowing capacity if they're trying to acquire sites. So interest only, 10 years, great update. I like it because it's something where if you're looking to sit on a property for say 5-6 years, not really do a lot, let that equity growth occur, we submit it, there's no reapplication, versus if we look at some of the standard lenders out there at the moment, you can go typically up to 5 years interest only. So what that means is at the conclusion of that 5 years, it's going to roll into a principal interest loan over the remaining life of that loan. So let's say we originate a 5-year loan over 30 years. It will then default back to the P&I repayment over 25 years, amortize that down. So it can be quite a shock if you're in that holding phase and you come off an interest only and then you go into a 25-year at an accelerated repayment, or even lower, maybe it's a 20-year P&I term left, you may be stuck in terms of borrowing capacity to be able to refinance back out or extend that interest only. So when you do that, that is what you call a credit critical application. So the bank will want to reassess your situation. So quite often investors want to have really set and forget facilities there that can operate in the background without them having to reapply or update their financials into the future. So obviously as we discussed, there's some benefits around cash flow, higher holding costs. So I'll put a little example here that you can see, but I'll put together an example around someone looking to buy, they settle on a $750,000 investment property, they've got $100,000 in offset which is attached to the loan. So the monthly repayment at 6%, if we did a 10-year interest only loan, it's going to be $3,000 per month. After we factor in that repayment, because we've got the $100,000 in the offset, that will bring down our monthly repayment to $2,500. So we just think about that. The interest expense would be close to $360,000 over that 10-year period, and our loan balance at the end of the 10 years would be at that $600,000. So we haven't actually paid anything down. The property value, if we assume a 7-year annualized growth over that 10-year period, that property is now worth 1.4 mil. We've got 875,000 equity. And option 2, where a lot of lenders are getting stuck at, is that 5-year interest only. And if we assume that our monthly repayment would be 3,000 less what's in the offset, 2,500, but our end position, our equity, because we had 5 years of paying down that loan over that 10-year period, interest only for the first 5, repayment over the last 5, our equity position in the property is 935,000. And then the final example, if we start repaying that loan P&I from day one, instead of 6%, the bank will give us 575 because P&I interest rates on investments slightly lower. So our repayment's higher, it's 3,500 per month. We can still use the offset account, but quite often a bank will still charge the 3,500, so it's higher on a cash flow. It's an extra 1,000 per month in terms of repayment if we're not factoring the offset facility. But our interest expense over that 10-year period is significantly lower, which means our equity would be $976,000 on that same property. So it's only $100,000 more equity if we start day one P&I versus interest only over that 10-year period. So it does make quite a substantial difference. So if you're thinking, going back to that initial phase, if you're in that acquisition phase and you're trying to grow your portfolio, you think about, how do I get equity in a few years' time to use that for a future deposit? So P&I could be an option, versus if you're in a phase where you've got what you need, you've got enough debt there, and you want to sit on that portfolio and let that grow over the next 5-10 years, then that 10-year interest-only period could be something to think about. So further to that, you can look at, if you're not looking at a full 10 years, there's options out there. There's actually an option where you can look at a 10-year fixed interest only as well. Would be very expensive, but if you're looking at a shorter term interest only fixed, around that 2-3 year pricing can also be suitable in terms of managing your cash flow. It's like anything, feel free to reach out to us. We can run the serviceability based on those two scenarios and where that puts you in terms of your cash flow and also your borrowing capacity. If you have any questions, please reach out. Thanks, guys.